Okay, today's Monday, November 5th, 2018, and we are looking at the euro dollar. So I'm going to talk about a few things here and share some information that I shared with a group of subscribers yesterday. So last night I hosted a free live coaching session. There was no pitch, there was nothing, it was just a free demonstration and a coaching session on how to execute the techniques that I use, some of them anyway, the ones that we're developing. And I talked about some specific levels that are now starting to play out and unfold as the New York trading session, starts to take place and we get more participation. So last night, which was Sunday here in California, I'm in California, so I'm 3 hours behind New York. So very often when I refer to a specific time, I'm usually talking about New York time. So right now it's about 10 minutes after 10 New York time. And I talk about with my trading system very often, I get really good signals and trading opportunities during the New York session. And I'm not saying it's just that's the only time, but very often that's when I get good opportunities. And there's a lot more participation at that time. There's more momentum. And when I get into certain trades, I'm less likely to see retracements. So in this video, I'm going to review some of the things that I shared with the people that attended the event last night. I'm also going to include at the bottom below this video the link to the presentation that I hosted yesterday. That was like a live webinar presentation. This is just a video, and I'm going to post this on YouTube, but in the description just below this video, you're going to see a link to watch the presentation from last night. And during last night's presentation, you'll see me discuss the setups that are now unfolding and what I was thinking and how I was forward thinking down the road. So sometimes you're projecting, right? You've got to get your expectations in line. You've got to get some things. You're anticipating certain things, but you got to follow along. You need confirmation, and that's what I was sharing last night during that webinar presentation is what I was going to be looking for today. And I also mentioned that sometimes I will say to my coaching students when I'm trading with them personally, one-on-one, and we're looking for trades, I'm trading during the London and New York session. So I'm trading with my coaching students in a live chat room environment from 3 a.m. to 1 p.m. New York time. And sometimes during the London session, I don't really get any signal. Sometimes it takes a little while. There could be a little bit of activity during the London session, but I still don't get a valid signal or nothing according to the way my trading system, what I'm looking for, what I'm comfortable trading, nothing's really lining up right. So I'm going to start off here with the euro dollar because we're actually in this trade live now. I've called this trade out with my coaching students. And the entry here was on that Tech One trade, but I'm going to walk you through the setup. So I'm going to show you the same charts that I shared with everybody during the presentation last night and the same charts that you're going to see if you click the link below this video to watch the replay of last night's presentation. So sorry about that. But anyway, here we go. So I'm going to go to the daily time frame. That's one of the things that I started off with last night. And we started off with the euro dollar. This is the euro dollar and the daily time frame. Now I'll briefly go I'll briefly go through, I've been talking all night for me anyway. I'll briefly go through what I was talking about here, and then if you want more details, again, watch that video from last night's presentation, click the link, and you can see me go into more depth discussing why I expected this bounce and what's going on here. So I'll briefly talk about the daily time frame here for the euro dollar. And I talked about that support low right there. That low stopped right at the 1.1300 level. Now the 00 is a solid, significant trading level. I mean, at one point or another, whether it's going to be an actual support low in price or a psychological level, it could have an impact on price. We need to be paying attention to the 00 numbers. The next thing that I'm doing, if I'm going to trade inside of certain ranges, and I'll show you that in just a moment here on the 1 hour time frame, what I mean by inside of certain ranges, I'm going to be trading to psychological levels. So the psychological levels that are important to me are top priority, the 00. So the 1.1300, 1.1400, 1.1500, you get my point. So the 00s are top priority. The next levels that I would think are top priority, in order of priority here is the 50. So it would be like, let's say 1.1350, 1.1450, and so on. And then beyond that is the 20 and the 80. So I'm going to trade to those targets depending on where I get into the trade. I'll show you that in just a minute here. You saw that just a moment here on the previous chart, which was the 1 hour time frame. You can see those price tags. Those are take profit levels that we're trading to. But here's the setup. The setup last night, as we were talking about the euro dollar daily time frame, is that it bounced, price bounced last week off of that 1300 level. Not only was it a major psychological level, it was also a support low here in price on the charts. This is significant. Now, that low, that was August 15th on the daily time frame. So the other thing that I talked about was certain patterns and certain technical patterns that I like to trade. I prefer to trade. So I'm using the CCI. You can see my indicators. The primary indicators that I use and that I'm looking at for setups, specifically if I'm going to be trading something, you probably heard if you're following along with my videos, the continuation breakout trade. So I'm going to be using the Bollinger Bands. That's the first one that I'm going to confirm with. And then I'm going to be using the CCI, and then I'm going to be using the MACD. And that in that order, I'm going to be looking at these indicators for confirmation. So last night I was talking about the CCI, and I was talking about a specific pattern that I trade pretty often. I can't say that I trade it every day because it doesn't set up every day. But it's a technique, and I have some videos on it, and I also teach how to execute this trade with the inside the members area. It's called the CCI Ghost Pattern. And I like trading the CCI. I've always traded with the CCI. I used it as the second tool to confirm my breakout trades. So back in 2001, I developed this continuation breakout trade method, and I was using the Bollinger Bands primarily. And then I added the CCI. I attended John Bollinger's weekend web seminar in Los Angeles, and he was talking about the CCI, so I put the CCI on there, and it made sense to me. You probably have experienced that, where you use certain indicators, and some of them you just don't like for whatever reason, and then some just really look good to you. You can see the patterns. You can see how it reflects and works with price action and the structure in the price pane in that window. So that's what happened to me with the CCI. And then I got really deep into the CCI and started learning the mechanics behind the CCI. What is it doing? Why is it doing it? Who developed it? What was he trying to do? What was he attempting to do? And then I needed to learn how to apply that to the strategies and the technical setups that I was trading off of. So I joined a group years ago called the Woody CCI Club. And the reason I pushed my charts up like this is just to give you a little history of this Woody CCI Club. A lot of the hardcore CCI traders, they would trade just by looking at the CCI indicator. Just the patterns and the formation here in the CCI. That told them when to get in and when to get out of their trades. And it drove me up the wall. Like, it made me crazy. I couldn't trade that way because a lot of them, the hardcore traders in there in this chat room, they weren't looking at what was going on here in price. They weren't looking at the candle patterns. They didn't care about support and resistance based on price. They weren't looking at any of that. They just looked at their charts like this. The hardcore traders there. And I couldn't do that. I watched them for a while because I wanted to learn. I wanted to see if there was other ways that I could improve the way I was using the CCI. But the one thing that I learned that I really took to was the ghost pattern. So basically what it is an inverted head and shoulders pattern. And it's right here. And I talked about this last night. So you can see the inverted head and shoulders pattern. I'll go ahead and put the crosshairs here. So that's the head. Excuse me. That's the head. That's the right side, left side, right? And then you would basically trade when it breaks the neckline. Now, I don't trade every head and shoulders pattern that I see. You can't. You shouldn't. You're going to experience some losing trades. And I don't want to do that. I want to be right as often as possible. Now, when I say that, I want to say that very carefully, or I want to sort of explain what I mean by that. Is that, and you have to hear me carefully because this is the way I explain it. So when I say I want to be right 100% of the time, I know I'm going to experience some losing trades. But what I mean by that is that I prefer to be right 100% of the time, meaning that I'm going to have to control my behavior and my execution. So I'm looking constantly for opportunities that are going to be better in my favor, the reward to risk, than to take trades where I'm thinking to myself prior to executing. If I'm thinking to myself, well, it might work, and then again, it might not work. Sometimes it works, sometimes it doesn't. If I'm thinking like that, then I'm going to stay away from the trade altogether. because those are the trades that are probably going to fail. And I don't want to have any failed trades. I just want to execute perfect trades. Again, I know I'm going to experience some losing trades, but by following that sort of behavior, I'm eliminating a lot of the risky trades. I'm eliminating or reducing the resistance and how hard it's going to be that if I do experience a losing trade. So in other words, I look at it like this. If I have a losing trade, I can usually earn back that loss on the very next trade or two that quickly. I'm not worried about a loss. I don't like the loss, but I'm not worried about it because I know I can earn it back. But if I had the attitude where I was just taking a lot of trades and they were risky and I wasn't paying attention to, what I talked about, trying to be right 100% of the time, if I did it the other way, where I said, okay, well, trading, I'm going to have some losing trades and I'm going to go ahead and try it. Let's see what happens. Last couple times it failed, so I'm going to try it again because maybe this time it'll work. If I'm thinking like that, that's more of a gambling mentality to me. And if I have 3, 4, 5 trades that are failed, now I'm making it harder for me to get back to break even where I was before I started. That's the other reason why I'm trying to be right 100% of the time. I'm trying to control that. And I put a lot of money on my trades, so there's no way I want to have that losing streak of 3, 4, 5 trades in a row and then say, well, that's how trading goes. It doesn't have to go that way is what I'm getting at. So I'm very particular about when I execute this CCI ghost pattern. And last night I showed how a few CCI ghost patterns back over here would have failed. I'm using the CCI ghost pattern and I'm willing to trade it if and when it sets up where price has reached a major support or resistance level. So let's go back to the charts the way I trade them. This is what I'm looking for. And again, this CCI ghost pattern that I just showed you a moment ago when I opened up the chart there for the to expose the CCI, it's setting up as price is hitting that support low from August 15th at the 1300 major psychological level. It's all confirming to me. So I'm willing to trade this. And last night I mentioned it would probably go up higher. I don't know exactly where the entry is going to be or when I'm going to get it, if it's going to happen during the London or New York session. If it happens during the New York session, I would prefer to trade it then. If there's also some economic data, it might help. If there isn't, then there's still more participation. So here we have the setup. This is the setup here, and I'm comfortable with that. Now remember, the CCI ghost pattern, it doesn't set up all of the time. You don't see it all the time. And even when you do, you've got to be careful. You want to take it at major support or resistance levels when price has hit those levels, not just the CCI. Again, be really, really careful with it. But I teach exactly how to avoid in my membership area. And I'm walking through everything that I'm talking about here. I'm walking my coaching students through this process. So I'm analyzing these trades and telling them, well, I can see the CCI ghost pattern, but it's probably not a good idea because it's not at, like I described. So our expectation last night was that the euro dollar was going to go higher. We just have to wait for the actual entry. So now I'm going to go to the 30-minute chart because that was the next thing that I covered in last night's presentation, was looking for the possibility of trading an HL30 here. Now in HL30, we're looking at a 30-minute chart now. This is the euro dollar. An HL30, for those of you not familiar, is a trade off of support or resistance from the previous day. It's a small short-term trade, very affordable, could be profitable if everything works out the way it's supposed to. And it is a 20 pip stop, 20 pip target. You have to be very careful with the HL30. You need to know what you're doing. You need to know the right environments to trade the HL30, and you need to know when it could potentially fail. And again, as I'm trading with my coaching students from 3 a.m. New York time to 1 p.m. New York time, I'm explaining all of this in great detail, showing my charts, analyzing the trades that could potentially fail and why I'm staying away from them versus the trades that are just fine and have solid confirmation, and that's the one I want to execute. So I'll walk you through the process of what we went through today. So with the HL30 today, there was a reversal candle finally, hours after I hosted yesterday's event. We were waiting for the possible HL30, but it was not confirmed, and it was pretty obvious that it wasn't going to go anywhere, and then I stayed away from it. So I did not go long on an HL30 with the euro dollar. It looked like it was probably going to make another move. I didn't know how low it was going to go, but I thought I would just wait for it to sort of pass, let it move out of the way, and then look for the reversal, which is exactly what we see here. We see a low from Friday, a slight pullback and some consolidation, and then a new price swing low, and then the reversal, right? That would be, at that point, another technique that I teach my coaching students. I developed this one. It's the second technique that I developed in my trading system, and it's called the Tech One trade. The Tech One trade is a bounce and a reversal. So now I'm going to go back to the 1 hour time frame, and I'm going to show you the entry on the Tech One trade, which was lining up with what we saw on the daily time frame and the CCI ghost pattern at that support level. It was all confirming. We were just waiting for the entry. Again, we don't always know when we're going to get the entry. So now I'm going to go to the 1 hour chart, the 1 hour time frame that I showed you when I first started this presentation here. And this is what we're doing now. So I'm going to open up the charts. This is the euro dollar 1 hour time frame. That's the Tech One trade right there. So the Tech One trade is a reversal candle. It's a bullish if I'm going to go long. We see the hammer, this perfect three candle pattern reversal. Perfect. This signal candle right there, that bullish engulfing candle, closes at least 50% of the length of the previous stronger bearish candle. That's exactly what I want to see. And then I coupled all of this confirmation, with what I saw on the daily time frame and the fact that the HL30 was not going to work. So we just didn't trade the HL30. We just waited for the pullback and then waited for it to go right back the opposite direction. I used to refer to that move that I showed you on the 30-minute chart where it dipped lower and then turned around and went right back up. It was sort of an oddball explanation, but the way I looked at it was, I remember as a kid having these slingshots. We used to call them wrist rockets, and I used to get in trouble with them. I'm sure a lot of us did, a lot of guys. But anyway, you pull it back as far as you can, and then you let it go, right? And whatever it is that you're shooting, steel pellet, marble, a rock. But anyway, you get my point. You see that move where price sharply goes lower, and then the reversal is pretty... there's a lot of velocity, there's a lot of momentum, and a lot of volume behind it. And that's what I'm trading. I sort of refer to it as that kind of movement, meaning that it's going to go for the next few hours in this direction if you time it right, which comes back to what I described earlier in this presentation, talking about how I prefer to trade during the New York session, because there's going to be more activity, more volume, and more momentum like this. And I can get into these trades during the New York session and not worry about retracements. I'm not saying that happens all of the time, because it doesn't. There are times during the New York session where you get a setup and then it just goes flat and doesn't do anything. But today we could clearly see it with all of the confirmation that I've built into this description explaining this trade for you, starting with the daily time frame, going to us watching and waiting for a possible HL30, which didn't really turn out, and then waiting for this move, knowing that we could see a new dip low, waiting for the pattern, and then trading the reaction. This was perfect. This was a perfect setup. It's been inside a consolidation. A lot of people are trading through the London session. Nothing's really happening. Then they're trading during the early New York sessions. Nothing's really happening. And then it dips lower, and then the reversal. Now everybody piles in. That's sort of the psychology behind it. Again, it's short-lived for the most part, but now we also have to take profits. We have to have those take profit levels in line and have our expectations in line and know what we're trading to. So we have an entry. I call this trade out with my coaching students live in the chat room. I told them I was getting in at 1.1377. That was the close of that candle. And now I'm going to explain to you some of the psychological take profit levels that I'm trading to. So again, the first target that I would trade to in this range, you see, because I don't have the advantage of a new A-B price swing where I could use the Fibonacci tool and then trade it to an extension target. I can't use, there's nothing here for me to use that. I can't do that here. I can't draw the Fibonacci tool here. I could probably look for reversals here, but there isn't that opportunity here going the opposite direction on this time frame with the data that I have. So I've got to trade to psychological levels. This is okay. This is going to give me good profits for the day, right? I can't expect a whole lot because it still hasn't broken out or above last week's high. So I need to take profits. I need to be careful here. we're still trading in this trading range from last week is what I'm getting at. So the first level that I'm going to trade to, again, the 00, that's a major psychological level. I would definitely trade to that level if I get the opportunity. Now, getting in at 77, I did mention that 80 and 20 and 50 were also targets or psychological levels that I would trade to. But getting in at 77 and trading it to 80 doesn't make any sense. That's just scalping. That's not even a pip in my, the way I look at it. I mean, you go with a 2-pip spread, you're at break even. There's no point. You wouldn't trade it that way. I wouldn't trade it that way. That's not the way to do it. You would go to the next take profit level, which would be the next psychological level, 00. And you'll notice here that today's pivot point, the fulcrum, is sitting right there at 1405. So this was a perfectly good, acceptable trade and plenty of profits here, right? 20 pips approximately. That's a good trade. Now, I tell my coaching students that one of the things I'm going to do is scale out here. So what I'm doing is getting into the trade at 77, scaling out at the first target at the 1400 level, and then the second half of my trade, I set it at a break even stop in case price comes back down to, let's say, 78. If I've got a 1-pip spread, if you've got a pip and a half, you get the point. If it comes back down, you set it appropriately so that you protect the profits on the first half of the trade to that first target. So you ensure that you're earning that much. But if it pulls back down and doesn't hit the second target, then you're stopped out on the second half at 0. You don't lose any money, but you protect the profits. Now, if the trend is strong, and we're looking at 10:30 New York time now, and it continues higher, my next target is the 1.1420. So this could be a pretty good trade. We're looking at about 40 pips if it continues higher. Now, one of the things that I recommend, and again, it's Monday, we've got to take that into consideration. We need to be aware of our surroundings. We need to be aware of what's going on. If this slows down and we start approaching the lunch time hours, 12 o'clock, 11:30, 12 o'clock, 1 o'clock, things can sort of change direction a little bit at times. So I may need to lock in profits before it actually hits the 1.1420 because it may not hit it on the number here. We're sort of stuck right in the middle. You can see what's going on here. It may go to 17, it may go to 18 and 19, something like that, and stop. So as it's approaching the 20, what I do is I set price alerts about 5 to 3 pips before, definitely 5 and then 3 pips before it actually hits the target and then at the target. So I'm alerted and waiting for and watching the behavior as it approaches that final take profit level. Because if for some reason it stalls and it doesn't hit 20 on the number, I can still lock in profits again at 17, 18, 19, somewhere around there. I'll have to watch it. And yes, I do tell my coaching students that I'm getting out and taking profits right now. I recommend you do the exact same thing. If they're going to follow my trading system and they want to learn it, I've got to be there to share my experiences, to share my thoughts, and to show them why it's working. I have to prove to my coaching students that it works. That way they develop eventually the confidence to be able to trade it on their own. I'm asking them to take a look at something that I developed, right? And then learn it, take the time to learn it, and I've got to be there to explain all of these details because then it starts to make sense. It's really hard to learn. Trading's hard anyway, right? But it's hard to learn a trading system by just watching a few videos or reading a thread on a forum or some kind of post and then thinking that you're going to get all of the details and you're going to understand this trading strategy and it's going to work just fine. That rarely works like that. I mean, you've got to be careful, using that approach. If there's any way that you can get access to the person who developed the trading system, do it. If you think that it's a trading system that would really work and you want to learn it, you've got to be there with that trader to trade with them so they can walk you through all of these details. So along the way, you also want to be paying attention to the news. I don't completely ignore the news. Very often with these videos, what you're seeing when I make these videos, you're seeing the technical setup behind it. And sometimes I'll talk about the news. Sometimes I'll just show you the technical setup. They work just fine, but I'm definitely paying attention to the news. So my trading system is a blend of technical and fundamental analysis. I'm well aware of comments and statements and political bankers, whatever it is, whatever's going on, and elections, events like that could have an impact. Where somebody makes a post, an analyst somewhere on a major website, financial website, and then it could have an impact on the trade. So I want to be aware of all of that, and I share and teach my coaching students exactly how to create the environment to bring in all of that data and all of that information. When I first started trading, it was really hard. Like I didn't know what to look at. What was I supposed to do? What blogs do I read? Who do I listen to? Should I be watching CNBC and Bloomberg, or should I just ignore it? I didn't know what to do. So I teach my coaching students how to pool all this information together and then tie it together with their technical trades. So this trade's fine. It's hit its first target here, and we're just waiting to see what's going to happen over the next couple of hours. We might hold on to the trade for the second half to hit approximately 20. So if you're going to follow along with this, please be careful. Pay attention as it starts to approach that 20, because it might stall. It could stall just a little bit short of it. The other trade that you might see in the video is the pound yen. And I talked about not selling the pound yen just yet. And it really hasn't moved with any velocity or momentum to the upside. But it is still possible that this one, the pound yen, could go higher. And I talk about that in the video. If you click on the link to watch last night's presentation, there is actually another price target here on this pair at the 148.00 number, 148.00. That would be another take profit or final target on this continuation breakout trade from last week. If you want more details about that, again, watch last night's video. It's the link to that video to watch the replay is just below this video. So now if I'm wrong and it doesn't go to the 148, we have still earned 150 pips on that trade here, because we would have, or you should have, locked in profits there. We already did that. I recommend last night when we were talking about this pair that if you were in the trade, you should have already locked in profits there at the 147. If it turns around and goes back down, well, then maybe I'll get an opportunity to sell it as a continuation breakout trade to the downside. It doesn't really matter to me. I just need confirmation. But right now, it's just been very, very choppy, and I've really done nothing with it. And then the other pair that I talked about was the pound dollar. And the pound dollar, this is the consolidation range. You'll remember this, or you'll recognize this when you watch the video, but you will have remembered this chart and the way it looks if you attended last night. So with the pound dollar, I talked about a new range of consolidation here. Friday's high, that pullback low. So far today, Monday's trading range, it has stayed inside of that consolidation range. Now, I don't know if it's going to actually give me a continuation breakout trade. It might give me a signal candle. But again, I've got to go to these indicators to confirm if and when that does happen. And very often I'll say, it doesn't really matter to me which direction. If I'm not in the trade and I'm looking for a trade, it really doesn't matter to me which direction it goes. I just want to be able to confirm that I know where it's going to go when that breakout actually occurs. So this level right here, the 1.2950 and then the 1.3040, that is a very appropriate range of consolidation. One of the things that I stay away from is if the consolidation range is too small, let's say 40 pips from the low to the high, or 50 pips from the low to the high. If a 1 hour candle closes outside of that range, very often if the range is too tight, it will lead to a head fake. So I stay away from that. I need a very appropriate, qualified, confirmed consolidation range that I can box in that is a significant distance. This is about 90 pips. This makes sense to me. So I'm comfortable with this range. I might have to make some adjustments to it. So as I go along, as time goes on this week, if price spikes up or spikes down, I'll make some adjustments to that boxed in range of consolidation, and that's okay. I'll just follow along, and then eventually I will get the continuation breakout trade, which is exactly what we traded over here last week, the continuation breakout trade, and actually the T3, but I talk about that in the video. So go ahead and watch that video. The video was a little bit longer than normal. I think it was about an hour and 45 minutes, so just to be prepared for that. So anyway, thank you for watching this video. If you've got any questions about anything that I share with you today, send me an email, and I'd be more than happy to help or make a short video to explain exactly what it is that I'm doing here.